What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. If that sounds like something you are interested in, consider subscribing, as I do provide daily updates as well to get you prepared for the day in the week ahead in this glorious market. And as per the usual, we're going to go ahead and throw this right up here. Going to kind of give you a little bit of a recap of last week, and then kind of get into what we're looking for in this upcoming week. Now we are still in earnings mode, but something I discussed last week. I try to give a high level overview of the upcoming week, and last week there was some big hitters still left on the board as far as earnings was concerned, but there really isn't a lot of major earnings that are going to do too much from this point. Now we do have. One thing is for certain is we do have some good earnings still, but I don't think they're really going to do too much. You do have Home Depot, you do have Target, you do have Cisco, Baba, you do have Walmart this week, John Deere. So you have a lot of good companies that are reporting this week, but again, at this point, I think the market's going to make up this decision nonetheless. And after we kind of go over and I discuss some things that I've seen over the past week, I think that more so is going to guide what the market's not going to do as opposed to the earnings. The earnings will add to it, especially if you watch Home Depot, Walmart, and all them. Again, biggest thing is to kind of watch what people are purchasing, as we've noticed from Target and Walmart earnings that there's been a lot of employee theft going on, massive employee theft to where people are just shutting down stores. And then also know that people are buying a lot of just name brand, like not name brand things, but a lot of store brand items, purchasing just to try to save a couple bucks, considering what's going on. And and like I've said, we are really in a bad state, and we're starting to get a lot more recession numbers. You're starting to hear a lot more people talking about it, a lot more openly about recession. Now that we're kind of starting to talk about a pivot that could potentially be hitting us here in June, July. We will have to see. As of right now, we don't really know what could potentially happen. Again, really, this is why they say sell in May and go away, because essentially the market becomes really dead between now and June. And understand that a lot of volume goes away just because kids are getting off for school, and families are moving, are taking vacations and stuff like that. So you don't get a lot of volume within the market around this time. And then normally June kind of bottoms out, and then you kind of start getting that fall rally going July, August. But we'll have to see. Again, we are not in a normal cycle at all. This is why I try to reference normal cycles a lot, so you can kind of compare it to what's this historical time that we're currently going through, as you do kind of see some of the normal cycle in there when it comes to like earnings modes and stuff. But aside from that, things are pretty out of whack. So with that being said, let's go over the past week. So the big thing over the past week, what we're really looking for was the core inflation. They're expecting 5. We got 4.9. So yes, it did come down a little bit, but things are still really bad. Again, it's getting sticky, and that is the issue. And what is concerning is that they're thinking that we may need another 25-point basis move in June, and projecting like maybe it's going to be July. We're going to get the pause. We don't really know. And so again, that is we will have one more core before monetary policy, as you can see on there. We got one more core in June 13th, so the day before. So that will help the Fed if they're going to determine if they're going to raise another 25-point basis move. If it's going to continue to be sticky, they might go with another 25. And again, we have 3 different phases when it comes to inflation, or when it comes to interest rates. You're going to have the increases is the first phase, and then the pause is the second phase. And then typically you got cuts on the third phase. But to even reach the third phase, you have to have a big cataclysmic event for the Fed to start cutting rates. So you can remain in stage 2 for a very prolonged period of time. And I'm talking about years here. So just realize it could be a short span or it could be a long span. I'm aiming that it's going to be kind of a short span, because I think the Fed are overshooting this as far as these interest rates, and that they've and understand that we haven't raised interest rates like we currently have in history, right? Rates haven't been increased that fast, and so that's a concerning point. Is it's been over a month since we had our first bank failure, and then understand that well, we're still walking on eggshells in the fact that we got Pac W. You got a lot of these others, regional banks that are in the news like every other day. It seems to be extinguished really quickly and then goes quiet for a couple of days. They're about ready to break, right? And then understand you got people like the CEO of JPM coming out saying that it should be banned to short banks because it's heavily manipulated, which really still upset me from that a week ago when he came out and said that um, when they are manipulating banks heavily themselves and understand the corrupt system which it's all based off of. So nonetheless, with that being said, going back and talking about the banks a little bit this week, again, there was still a lot of weakness in a lot of regional banks that were highlighting us. Not this past week, but the week previous, when there started being some heavy selling. You started seeing some heavy selling again this week a little bit. But the market has been very, very flat. Like the market needs some sort of information as of right now. People don't want to put risk on. People are fearing recession. We're getting a lot more recession numbers that are still scary. But not only on top of the recession numbers, you're getting core still sitting at very high numbers, and that's very, very concerning. Um, in the current state, right? Because not only do you have high interest rates, your dollar is essentially you can't go out and purchase a new home or get a new car that you may need for work. And then also understand that it affects businesses, so they can't take out business loans, and so they're having to downsize. So you have that aspect of it, and then understand that inflation is still so high that people are having to work 2 or 3 jobs. So it puts people in a really bad bind that they have to work multiple jobs, or they have to start selling assets or selling their home. Where in this kind of market, you really don't want to be selling your home unless you really have a solid place to go to after the fact, because it is very, very hard just to even rent some places. Rent is still very, very high. So with all that being said, so the core is still high. Banking crisis still very much in the picture. It's just we're still just really waiting for the next shoe to drop, and it's going to drop at any moment. We don't know when it's going to drop. It's going to drop at some moment, and we are just 2 weeks away from a possible default. Now we're not really sure. Yellen keeps really emphasizing that we need to be done before the 1st of June. There was talks that we may be able to go to August on the budget that we have. We don't really know. Is it really June 1st? Or are they trying to put a rush on it so that they can hurry up and get something passed, so that essentially what happens is that we don't default? Because the last thing you don't want to default, because not only will the market crash, essentially everything will pretty much crash, and we'll be in a really, really, really bad position. That's the last thing you want. But also, with that being said, the closer we get to the deadline, if it is the first, we can get downgraded on credits, and so that could really, really hurt the U.S. economy even more, and that in itself would cause a crash. So just be mindful of that. So again, we are in a very tough spot with a lot of different things that are going on, and we still haven't priced in a recession. Now, if we get a downgrade in credit, that could potentially give us a crash that would cause us to essentially, quote unquote, price in a recession, right? And whatever means that will be, that would be enough to price in a recession. Again, it all depends on timing, right? If that crashed, just an example, if that crashed the market and took us down to 3,200, then if they can come out and say, hey, we're in a recession, and the market would have already priced that in, right, because of the crash. So just be mindful of that. Again, I do believe that whatever happens after this, we are going to get a big boom cycle after this. I think once you get a really solid normalization, I think that's going to happen. Also understand that it's going to be a very slow process economic wise, but I think we can start making our slow push back up after this last normalization move. Whatever kind of crash, or if we're going to fall down, I still think we're going to hit a newer low for the past 2 years. I still think that 3,200 is kind of where we're going. What's going to get us there, I don't really know. There's a lot of things I talk about on this channel, so we'll really have to see there. But so those are the two biggest things. Events this week. There is a panel with Powell on Friday. There is a lot of Fed members talking this week throughout the week. Again, those are going to give you a lot of intraday moves. Again, if they start talking heavily, something to be very mindful of, because next week is going to be important. Not this week, but next week. We're going to have the FOMC meeting notes, and Powell pointed specifically to those notes that they're going to have the opinions of other Fed members on if we are in a recession. Now, because those notes come out next Wednesday, we have Fed talking this week. They might start mentioning recession a lot more this week, because there's a lot of Fed appearances all throughout the week. I think Bostic also is on a panel Wednesday night, so keep that in mind. We don't have a lot of big events. Understand that during this week. But if there's any kind of inflation concerns, it's going to bring down tech. And then if you have any recession kinds of concerns, that could potentially bring down the banks. And any banking news. So these are the things you have to keep in mind. There's a bunch of big hitting news events that could happen at any time. So you have to be very careful of that. So again, if we were trying to price in recession, that would probably be the best time in a normal cycle to do that, into July. But again, we'll see or into June, but we'll see moving forward. So monetary policy is until June 14th. Core is until June 13th. Those are things that we talked about. Upcoming earnings, I just talked about that. There's a couple, there's HT and stuff, but I'm not going to put those down. Those aren't ones I'm really watching. I might glance at them and talk about them throughout the daily update, but there's no point really going over them here because I'm not really going to be watching them that closely. But we'll see. Again, any earnings could be, you never know, right? Any piece of news that you wouldn't think holds a lot of weight could, if it's extreme, right, and may point to something bigger like a recession or something. So that's always something you have to understand. So we never know that, right? That's always a black swan event. You never know what can happen. So as far as watch list, we got SPX at 63, Tesla at 10. So Tesla's bumped up a little bit. Again, I think that's more so PPI came out and showed more inflationary numbers. So you might want to watch tech. Tech might start selling off pretty heavy this week. So that's something to watch. Tesla has bumped up a little bit. BA is about the same. JPM is pretty much back to normal as far as the movement there. So everything is pretty much looking like normal moves for this week, not or average moves, that nothing's really going to happen this week because we don't really have an event that's planned anyway. But tech is again expecting a bigger move. So what is it going to say? Is it because inflation scares again? And anytime we get any big inflation scares, tech is definitely the first one to start selling there. So with that being said, we're going to go ahead and take a look at the charts. So with that being said, let's take a look at these charts. As you can see, the market has been very, very sideways for what looks like to be about close to about a month now. We've had some bigger moves here, but we've ultimately just been consolidating very, very tightly here between the 4,200 and roughly around that 4050 mark. So again, I think ultimately we're just waiting for some news, right? People aren't going to try and put risk on when there's a fear of recession, because when you start a pause, that means a recession is essentially at hand at the time. In any recession you've gone back to, it's the same kind of setup. Once you start getting to the point to where we start pausing, at that point you're just essentially holding the line until something breaks. It is so catastrophic that essentially is going to start the market to start cutting rates. And again, it has to be something that is very big, whether that's multiple banks failing. Even if you look back at the 2008 crash, right, there was multiple banks failing before it actually started really cascading and started selling off heavy before you started cutting rates, which I think, again, printing 40% of the money supply has kind of accelerated that. So I think we will have a little bit more of a rapid pace when we start selling off. But again, we will see. Time will tell. I could always be wrong, but it's just we deal in probabilities with the current market sentiment. We deal with the events that are going on. So that's how I try to approach it, and then go from there. And then watch price action is huge for me as well. The market isn't going past 4,200, right? Like no people aren't putting risk on past 4,200. Some really heavy sell pressure. Next thing is, in my mind, is the price in a recession, and then we can go from there. So with that being said, we'll see what happens this week. But again, if we can finally break this 40-50, again, I still really think we're going to head at least down to the 3,800. Any lower than that, it really depends on what the essentially the motive is on the downside. If there's how much fear comes, because every time we get fear, it just the greed comes right back. It's massive fear, and then greed comes back. Massive fear, greed comes back. I don't know if this is liquidation here. It could very well be. That's trying to liquidate for this thing potentially falling lower. Could be a strong possibility, but we'll see what happens there. But that's what we're looking for this week. Again, if we want to start breaking up, if we do for some reason break the 4,200, again, I think that's going to keep us in that 4,300 range until we get some sort of really positive news. The news we've had, these mild increases or decreases aren't enough to cause the whole market to go back to all-time highs. It's just not. It'll move, it'll keep the range, but aside from that, people aren't going to put on a lot of risk given the current situation. So now let's take a look at Bitcoin here. If I could find Bitcoin, there it is. Now, Bitcoin took quite a dive during this past week. We'll see how this wants to play out. But again, there's some issues going on with the NFTs on the Bitcoin side. It's causing fees to get higher, and a lot of people aren't liking that. So much so that it almost stopped crypto or Bitcoin from creating blocks. Right? It's getting bad, and ETH had the same issue this week as well. So there's a lot of issues going on that you have to be very careful of, because if they start showing any weakness, especially in a very weak market, could cause crypto to really start giving up pretty heavily. So really watching that this week. Again, bulls, you want this thing to break over the 31K mark and at least hold the 24K mark. If it can't, this thing could potentially be heading back down to the 20. If not lower than that, making new lows past that 16K mark. So, and I think, like I said, I still think it's very much tied to the market. It's going to be a long while. These things don't happen overnight. Even given Bitcoin is just now being established, even given that, you still need to give it more time to try to separate itself from main financial systems, right? It's still heavily reliant on that, like everything else is. And that's why even the dollar, it's still going to take a very long time. Even if there was de-dollarization, it would still take a very long time for that to happen. So that being said, we will take a look at Tesla. So Tesla had a big move this week and then sold right off. The good thing about Tesla is that there's a new CEO for Twitter, so that is definitely allowing Elon to focus more again back on Tesla where he needs to be. Again, I think that move where he sold a lot of Tesla shares over the past year was more so just to try to preserve some of that cash for what is currently about ready to happen. So he bought a new corporation to help fuel that, and I think Twitter could help fuel Tesla and SpaceX in a big way. So I think that's and also why it called I think it's X Media or something now. So with that being said, we'll see. I think it's just a big a good move on his behalf to help fuel all his other businesses. So again, we'll see what happens there. But Tesla right now, it needs to hold the 165. If this thing does break again, I really think it's going to come back down at least to the 140. I think higher low here. I think this thing is going to break lower than the 152 here and get into the 140s. Again, depending what's feeling it. If we start getting inflation concerns again, it's going to be heavy sell pressure for tech. So watch tech very closely there. Take a brief look at Apple here. This is very overextended. And so this is something I'm saying it's starting to lose steam, and it is coming off of an earnings cycle. You need to give this thing 4 weeks to sell off. We'll see if Tesla can, or not Tesla, but Apple can pull back down in 140. I think it's something we need to really watch there. Palantir, again, something I want to buy a lot of on this down cycle. but really watching here, right? Like it rejected hard off the 10. As you can see, the 10 has really been pretty a solid wall here. Hard rejection. It's going to fill this gap. It's going to at least come back down to 706. How long it's going to be down there again, all depends on market sentiment by the time it reaches 760 again. But again, something I want to start DCAing on any kind of pullback. And again, depending on start pricing a recession. Again, the biggest thing with that, that's why a lot of people, you're seeing this big transition into tech because people are like, oh, well, tech will be a safe haven. Tech will essentially pull us out of recession. I think that's why it's what's kind of been holding us up. But ultimately understand that if there is inflation concerns, that's going to be concerns on tech, right? Because the big downfall of tech last year was because of inflation concerns. Since we hit all-time highs and then we hit all-time lows on tech, right? Or some of the lowest lows we've seen in a very long time in tech because of inflation. And if inflation is a big concern again, you're going to start seeing some heavy selling in tech. So you're not going to have that safe haven with banking crisis and now inflation concerns. So both industries that essentially been holding up the market are going to start rolling over and selling off. And then now this week, you have a lot of value plays on top of it. So if you see a lot of weakness in value plays, that can be essentially your third wheel to start more selling to the downside. So something to keep in mind moving forward. BA, again, still playing that range, 220, 195. If you don't know that by now, that's pretty much where we've been playing BA, right? BA essentially playing a chop back and forth. Just like the market, just waiting for some bigger news to occur. Then you got a JPM. I scrolled right by this bad boy. So JPM, heavy selling. Banks had some heavy selling on Friday. So we'll see if this does gap fill. Again, something I said, this would at least gap fill to 125. I still think this gap fill back here is going to fill at some point, and you'll eventually see JPM back at 108. Again, these bigger moves like this, you can't build a bull case off this, right? Like this thing isn't. Things needs to correct. It needs to slowly grind up. It can't just bottle rocket out of here, and then we're just going to keep bottle rocking up all-time highs each and every day. That doesn't happen that way. Even though the media and everything portrays it being that way, it's been playing range. It can't break out of this 144. That's the top. Now we need a bigger pullback. Here, we'll see if we can make a newer low here and potentially break back down and fill this gap all the way, and then potentially make a new low roughly around the 115, if not lower than that. So we'll see there. But the banks themselves have been, again, very weak. A new higher low here. We'll see if we can break down lower on this one here. So keep that on Goldman Sachs. Could be essentially shooting for the 286. BAC has been very, very weak. Bank of America has been very weak. So let's see if you can hold this 26 level. If not, could potentially hit 24. So that's pretty much what we got for this week. Again, I think we are very heavily weighted on. Again, we got some Fed members this week. My biggest thing is watching the Fed and seeing if they start mentioning recession a lot. And then again, any kind of black swan events, what's going on with the banks this week, what's going on with value plays this week, or a lot of really bad earnings this week. They may not make a big impact this week, but understand that if Home Depot just surprises horribly bad, that could be a big concern for the future. You got to think more future projections. How that's going to impact the market, is how it's going to impact housing, all those other aspects. So again, if there's not a lot of demand for houses and new construction, Home Depot is going to suffer a lot, and we've started to see that a lot of that stuff in the works. So we will see. And again, we're all running up to the FOMC meeting notes, which could heavily report to recession. So we could ultimately be waiting for next Wednesday for those notes to see more Fed members talk about recession, and that we are in a recession, potentially a mild recession. Again, there's no such thing as a mild recession, but that we are, in fact, indeed in a recession. So that's kind of what I'm looking for this week. But with that being said, and you made it this far, please drop a like button, share this out. And until next time, I'll see you guys later.